Hey everyone, it's Barb here, broker owner of the Realty Group, and I am here today to check in with you about something that a lot of buyers don't get educated about by their realtor because, quite frankly, their realtor doesn't understand them. And that's called supplemental property taxes. And essentially, what a supplemental property tax is it's the difference between what escrow collected at the close of escrow and essentially what property taxes should have been due on sale based on the transfer of title on that property. I know that was a lot of words, but essentially what that means is that our property taxes in Southern California are collected on really two different time periods in the year. Once in March and April and once in November, December, around that time frame. And they're 6-month spreads. And when you close escrow, you might close escrow in the middle of a tax period when the seller's already paid their property taxes to the county. And you're essentially going to have to pay for a portion of those property taxes. Now, escrow can only prorate those property taxes based on the current seller's tax bill. And you're going to have a new tax bill and a new tax rate. So there's going to be a gap in the amount collected. Now, a lot of people get frustrated because they're like, escrow knows what the new tax rate is going to be because it's kind of a flat tax rate, but it's not always. Properties have different tax rates for different reasons and different bonds and things that are attached to the property. So escrow can't legally calculate that. Now, how can you prepare yourself? If you're purchasing a home in LA County, when you go into escrow, I highly suggest you go on the Los Angeles County Tax Assessor's website. They have a great assessor's supplemental property tax calculator where you can enter in the day you're going to close escrow, the amount you're going to pay for the property, and the address, and it's going to calculate your supplemental property tax for you. And here's why that's important. This bill is going to come one time, sometimes twice, depending on if you're split between two tax years. It's going to give you two opportunities to make the payment, split in half, but it's not going to be paid by your mortgage company that typically is impounding your taxes. That's important to know. Your mortgage company will not pay this bill. You have to pay it. And unfortunately, depending on how long that person has lived in the property, this bill can be a few $100s and it can be lots of dollars. I don't know how high they can go. I don't know how much, if I've ever seen, how much they can go, but they can go very, very, very high. So here's my motto. Be prepared for it. Educate yourself. Use the calculator and know that the bank is not going to pay your supplemental property tax for you. If you need more education or if you need a trust advisor in the real estate space and you live in Southern California, we'd love to be that resource for you. Have a great day.